dance relationship with Misty Copeland, who's our women's
I was going to say,
founder.
you need women who do a little bit of shopping.
Yeah, so we have something that we'll be announcing soon that's exciting. So I'm very happy with where they are. People love the product, they love the quality, and we're just getting going, but very excited for the future.
All right, we're going to just shift a little bit because I am curious, Derek. Are you looking for any other investments, you know, in sports beyond baseball, or maybe a MLB team or anything?
No, I've been down that path. No, I'm going to take a break from that. I spent a lot of time with my 4 kids who are 7 and under, so it's a full-time job, especially when you're talking about Major League Baseball ownership. So at this particular point, I think I have my hands full.
So no other, yeah.
Well, when you say take a break, are you ruling it out for the future, or do you want to get back into
I
ownership?
learned a long time ago, never say never.
Yeah.
Because you never know. I just said it 3 times in a row, but you don't know where the future is going to lead you. But at this particular point, no.
I do also wonder, the two of you, like when you think about either athleisure or athletic apparel, companies that you look at that you admire, or leaders you admire. Let me ask you, Chris, first. Like, is there somebody that you look at and say, that's who I kind of get some cues from, or?
I mean, we always talk about Nike and the Jordan brand. Those are the greatest, probably the greatest brand maybe ever. So while, you want to be them, but if you're half of what they become, you're very successful. And I think the athleisure brands are great too. I mean, I won't name them because, but I think there's a lot of great brands these days. So we're just trying to differentiate, give a reason, why you might need our product versus those products, and hopefully it works.
Leader, you look at? Oh, you're smiling.
There's a lot. It's one that comes to mind. He said Jordan Brand. MJ's been like a big brother to me, and I think I have young kids now, and you want them to choose their career path and find someone that they can look up to.
Yeah.
You want them to see someone who's been successful, and you talk about Michael and what he was able to accomplish on the basketball court, but I think you look at athletes post-playing career, he's up there at the top, what he's been able to accomplish from a business standpoint. So he's someone that I look to and go to for advice.
All right, you're going to go there?
You go.
World Series.
Baseball.
I know. I have to do this. All right. So you're going to be in the booth, right?
I am. Fox? Yes. Yeah.
Who do you? Can you think about who might be there?
I don't know. It depends. I'm not trying to skirt the question. I'm really not. But a lot of it is matchups.
Okay.
And we'll know in a couple weeks because some teams. I know during my career, I used to play Anaheim Angels all the time. We just couldn't beat them. And, finally we broke through and we were able to win in 2009. But it all comes down to matchups. So there's some good teams out there.
Chris, you talk baseball, and I'm curious what you might think for the World Series.
Chris knows nothing about baseball.
Are you serious?
No.
I don't.
Do you really
no,
not?
I do know baseball. I'm a fan. I don't.
And you did a deal together?
I don't bother Derek with it. But I'm a Yankees fan. We'll see. They don't seem to be able to perform in the playoffs for the last 15 years now.
We'll discuss it on Fox.
Hey, listen, guys, got about 40 seconds left here, real quickly. In I don't know, a year from now, what's the conversation around your company?
I think we'll start to look at stores. I mean, I love stores. Not many people do in retail. We have 90 of them at Untucket, and we're opening more. I think it's really important for the male shoppers, so I think we'll look at that, and we'll look at continued growth in these different areas that we discussed, bookstores, golf, e-commerce, so it's very exciting.
Same thing for you, Derek. In terms of greatness wins, in a year from now, what are we going to be talking about?
Well, I think it's all awareness. You want people to be aware. You want to walk around the streets and see people wearing it, and I'm very confident in the fact that someone buys our product and they wear it, they'll be happy with it, and they'll return as a customer.
And no pilling, you promise?
Well, you got to tell me.
Derek Jeter, of course. Chris Riccobono. You guys got me flummoxed.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. 5,600 right now on the S&P 500 index. We're up 45, gain now of 0.8%. The Dow, the S&P, NASDAQ all rallying today. PPI Thursday with the Dow up 216, up 0.5%. We've got NASDAQ up 206 now, up 1.2%. The Russell 2000 index of small cap shares doing a little bit better, up by 1.4%. 10-year 3.68% with a 2-year now yielding 3.66%. Spot gold up $45 the ounce to $25.56. That's an advance of 1.8%. And West Texas Intermediate crude oil up 2.6%, $69.03 for a barrel of WTI. Shares of Signet Jewelers are surging after the company said sales of its engagement jewelry are up, a sign that a crucial part of its business is recovering as more couples agree to wed following a pandemic lull. Signet right now up by 12.6%. Among the names reporting today after the close of trading, we'll be hearing from Adobe. And right now we got Adobe up by 0.7%. Again, recapping stocks higher. S&P up 46, up 0.8%. For on-demand news, 24 hours a day. Subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Well, the latest episode of Chief Future Officer premiering last night on Bloomberg Television. The series, as you know, highlights companies and their CFOs, their chief financial officers, who, safe to say, after the great financial crisis, after the global pandemic, became a crucial member of the C-suite. They're often working side by side with their CEOs on systems, stresses, strategies, and success at companies.
Well, last night's episode was with the CFO of Johnson & Johnson, Joe Wolk. Bloomberg News correspondent and host of The Big Take, David Gura, sat down with him. David joins us here in the Bloomberg Business Week studio now. J&J, it's an iconic brand, an iconic company. It's been around for a long time. Tell us just about your approach, what you and the team were thinking as you did this episode, as you went in to speak with Joe Wolk.
So it's such a storied company. I mean, it's been around for a really long time, and I think a lot of people are familiar with it because of the consumer product side of it. But what made the interview kind of interesting is that, or especially interesting, I should say, is that this is a company that split pretty recently. Yeah. So the consumer products are now under a separate name. That's Kenvue. And then there's the other side of the company that works on pharmaceuticals and medical technology. So I was really interested to hear A, how that split came together, and B, how the CFO, Joe Wolk, navigated that with Joaquin Duato, who's the CEO of the company.
Those two know each other well, right? And
so well,
yeah.
and they've been for decades. And that we produce is the role of the chief financial officer has changed so much that they focus much more on strategy, company to do different things. And that through when I sat down with the CEO, first and foremost, just how much he relies on the CFO for guidance. Yeah, it was just a fascinating look of, and it kind of got to dig in pretty deep.
Yeah, and I also think it's a company that had its tough times, right? About different lawsuits over. And I am curious that came up in terms of what the CEO and CFO maybe are on.
So they faced a lot of challenges over talc powder and whether that caused cancer, something the company, and there have been efforts to connect to a settlement, a multi-billion-dollar settlement. Those conversations, those negotiations continue, and I kind of asked about that broadly, but also in the context of hang on the company's stock. Is it that these investors are kind of worrying what's going to happen? And
right.
For Johnson & Johnson, and something I think are very keen to kind of figure out ahead of, but it's still something that's very much.
How do you explain the identity of J&J product side that we grew up with?
So much of the focus is on innovation. I want to play a little bit of sound here in just a sec, but you have this side working on pharmaceutical innovation, which is expensive. There's a lot of trial and error. Some things work, a lot of things don't. And then there's medical technology, where there is a lot of opportunity as well. And so one of the things that I talked with them about is this issue of kind of opportunities for synergy. And maybe we can hear a little bit about what Joe Wolk had to say about that.
I think if you look at it 10 years from now, probably the competitive set that we have will look very different. There are technology companies that want to get in the space of healthcare. I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place. A lower cost to society, people living healthier, longer lives.
So talking about that kind of synergy within the company, but also outside, and that was kind of centered in this conversation about AI, for instance. Like, would they partner with a technology company that could bring some of that to
Right.
bear? They think they're in a good position to do that. AI has a lot of potential to accelerate that process of finding and developing drugs, and that's something they're investing a ton of money in and hiring a lot of people to do.
Yeah, I do think about, here's a company, right, that's more than 100 years old. You do think about, like, kind of what's to come and how they think about it in a world where we've been spending, the last year or so talking so much about GLP-1 drugs and kind of where they go, where they think healthcare goes, where drug development goes.
So much of the focus is on cardiovascular health. They've done some acquisitions in that space on the pharmaceutical side, development on that side, and looking at sort of med tech opportunities to work on that as well. So yes, it's less on the sort of diet drug thing, more on these kind of traditional models, but kind of thinking through the entirety of the whole spectrum of patient care. So dealing with the drug side of things, but also what are the technologies that they could innovate and kind of bring to the marketplace that could make kind of work on both sides of that issue.
So how much of this is about innovating from within versus going out and making an acquisition of a proven technology or a proven drug that actually works?
They're definitely focused on both, and one of the cool parts of this show is I got to visit some of the labs on that campus in Raritan, New Jersey, and sort of see how all of this is unfolding. And it's like so many companies, has come back to life after the pandemic. There are people there doing a lot of this innovative work. So they're investing in their own in-house research. And we talked about M&A as well. I mean, it's been a challenging environment for so many companies with rates where they are. This is a company that, in addition to being around for a really long time, has a really storied history and a very good balance sheet, has a lot of cash on hand, has a AAA credit rating. It's very well positioned to make these investments going forward. So getting back to what we were talking about at the top, Joe Wolk, Joaquin Duato say they're approaching it very thoughtfully, just finding things that make sense. And some of those are big acquisitions that you would measure with a lot of zeros at the end. Others are smaller ones, but just thinking about that portfolio as a whole. And then, a huge challenge for pharmaceutical companies is this thing called a patent cliff. You develop a drug, acquire a drug, you have that patent for X amount of years. When it expires, goes generic, you're not making the kind of money that you would have been before. So thinking through that and just by doing that, having to have such a long frame of vision to think, like, what's going to happen when that happens? What am I going to have in the pipeline to replace it?
And I also do wonder, as the team goes through, and you went through in this particular case with J&J, what they had to say about kind of our global environment, whether it's politics, geopolitics, the upcoming election. You've been spending a lot of time, certainly, following the campaigns, David. And I just wonder, what are the stresses? Do they talk recession? Do they, what are their concerns?
They didn't have
beyond the patent cliff, which I know is always there. Of course.
We didn't talk about the campaign in specific or directly, but one thing we did talk about is how the company is navigating the Inflation Reduction Act, which the Biden administration pushed through. And one facet of that is kind of a renegotiation of a lot of drug prices as a result of that Medicare pays for. And it's something that's a very hard-fought issue for a lot of these pharmaceutical companies. Both Joe Wolk and Joaquin Duato said to me, they're not disputing the fact that drug prices are too high and people are having to pay too much for them, but they're faulting the way that law is put together and the onus on them to bring those drug prices down. So it seems like that's the point of interface for them the most when it comes to politics, is how they can kind of bring their side of this to bear, make sure that policymakers understand why that is such an important issue for them, why drugs are priced the way they are. And we were talking about innovation and all that goes into developing drugs. It's expensive, long time work, and they say if you start cutting these prices too much, it's going to make it difficult for them. Of course, people push back on that, but that's their position.
David, very briefly, 30 seconds left. This is a company that's more than 100 years old. What do you think the conversation that they want people to be having in 100 years about Johnson & Johnson is?
I think they want to be seen as a real big player in drug development in this country and around the world, one that developed real solutions for some of the worst diseases that we've seen. And so we saw, during the pandemic, a lot of these companies pivoting and working really fast to develop immunizations. They were among those that did. I don't think that they had the popularity of Pfizer and Moderna, but it's something where they pivoted very quickly to work on it. I think that they want to kind of preserve that legacy going forward.
We saved the most important question for last. Did you get to bring the lab coat home?
I did not bring the lab coat home, but those who tune in on YouTube or Bloomberg.com will see me in a lab coat.
You did Chipotle CFO, right?
Yeah.
Did you eat a lot of Chipotle?
A little bit.
Walk to go.
Did you get to develop any drugs?
No, Doug, no.
Okay.
Well, drug development.
I guess it depends.
It was a very cool thing to do. Okay. I'm very grateful that I got to do it.
Really good stuff. Bloomberg News correspondent and host of the Bloomberg Big Take, David Gore. You can watch the next episode of Chief Future Officer now at Bloomberg.com and, of course, on YouTube. Coming up next, holiday travel plans. We're going there.
information.
All right, everybody. A story from the Wall Street Journal today we want to bring to your attention. Millennials, you know, those younger folks. You're a millennial, aren't you?
I'm an elder millennial.
Elder.
Elder.
Ouch.
It's a real thing.
Ouch.
Yeah.
All right. Anyway, younger
it with pride.
folks, millennials, older millennials, elder millennials like Tim, increasingly going on cruises. Who knew?
It's not the cruise their parents nor
No.
grandparents went on, though. They want quick escapes, private islands.
Yeah.
So the Wall Street Journal notes.
Yeah, it's an interesting story.
I mean,
so,
I
what?
would do it. Yeah. Private island?
You're there.
All right, yeah, why not?
Who doesn't want to go to a private island, young and old? Anyway, with more on the travel scene and the upcoming holiday travel season, back with us is Haley Berg, lead economist at the travel app Hopper, joining us once again from Boston. All right, first up, before we get into your holiday travel outlook, you guys recently have come out with a report. Travel, holiday travel, consumer travel, is it slowing down? Are people looking for bargains? What are we seeing right now in today's environment?
We're seeing that this holiday season will be busy. Most Americans see holiday travel, if they do travel, as an essential expense. And that's reflected in what they're telling us. Right now, about 75% of Hopper customers say that they're going to be spending more on holiday travel this year, or at least the same as last year. And to do that, about half are cutting back on other expenses and are looking for deals and discounts and ways to stretch that travel budget further. So the demand is there, but so is that price sensitivity and a little bit of concern about being able to afford travel.
Are we too late, Haley, if we haven't booked our holiday travel yet?
You're not too late. Now is actually the perfect time to start planning your holiday travel. Our recommendation at Hopper is book your holiday travel, both for Thanksgiving and Christmas, by October 14th. That's the sweet spot when prices will be at their lowest and flights won't be sold out yet.
All right. So, you know, in terms of where folks are going, where they should be going, where there are deals, what do you have for us?
Most folks are headed to bigger cities in the U.S. over the holiday season. We see a lot of major hubs. Think New York City, L.A., Chicago, Atlanta. Most travelers going domestic are headed home for the holidays, so they're hitting those hubs and then either being picked up or going somewhere local. But internationally, we do see a lot of travelers getting away, making a week of it, whether it be at Thanksgiving or Christmas. And those destinations are bigger names like London, Paris, Tokyo, and Seoul.
Haley, what does the activity on Hopper tell you about disposable income for Americans right now? What story does it tell us about the economy? What's the narrative that you're seeing out there?
The majority of Hopper users are Gen Z and millennial. They're younger and they spend differently than older generations. What we've seen is that our users are willing to spend on travel. They're expanding their travel expenditure. And how they're doing that is being smart about when they book. So they might get the lowest price on their airfare, but then they'll spend $40 extra on a product like cancel for any reason or disruption assistance. So it's a generation of travelers who are price sensitive, but very focused on value. They want to get the best price and they want to splurge on things that are going to improve their experience, whether it's a fancy cruise or a product that lets them rebook if they're canceled or delayed at the airport.
Haley, if people do have flexibility, what are the best days to book holiday travel? I was actually looking at the difference between like flying on Christmas and New Year's Day, for example, and how much cheaper that was than flying, let's say, the Saturday before Christmas and then flying back the Sunday before New Year's. I mean, it was like 60% of the cost.
Absolutely. It'll actually save you on average about $200 on any domestic holiday trip if you travel on the holiday itself. Think Christmas Eve, Christmas Day, Thanksgiving Day. We know not all travelers are that flexible. So if you are a little bit flexible and you can travel, say, the Monday before Thanksgiving and return the Monday after, skip that Sunday return, you will save over $100 per ticket. And at Christmas, what you have to avoid is the Saturday to Saturday or Sunday to Sunday, making a week of the holiday. Try to depart the day before Christmas Eve or on Christmas Eve. Come back on New Year's Eve. That's how you're going to get the lowest price.
Hey, I want to go back, though, to what Tim asked you about discretionary spending or disposable income or disposable spending money, if you will, that consumers have. Do you feel like there's any signs that consumers are really, really pulling back?
What we're hearing is that pullback isn't happening on travel, but it is happening elsewhere. About 50% of our customers said, I'm going to cut back on other expenses in the next couple of months so that I can keep spending on my holiday travel. So there's definitely pressure on wallets. Discretionary spending is under pressure. But travel has really come out on top as one of those areas where travelers are working hard to maintain their expenditure.
All right, and before you go, those elder millennials like Tim, are they going on cruise ships? Are they doing, what are you hearing about the cruise industry? Just got about 25 seconds left.
You know, we're hearing that younger travelers are interested in value and packages. They want accommodations, transportation, and a great experience at a great price. So cruises are one way that they're achieving that. Other ways are finding great deals, package deals, whether it be through a platform like Hopper or One Travel.
So Tim on the Lido deck, it could happen.
I don't even know what that means.
That makes me just so upset that you don't know that. All right, Hilly Berg, thank you so much, lead economist over at Hopper. All right, for those watching on TV, the close is coming your way. Tim and I continuing on Bloomberg Business Week, on Bloomberg Radio, on YouTube, and on Bloomberg Originals.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, very good afternoon, everybody. We are 60 minutes away from the closing bell here on Bloomberg Business Week, live on radio, YouTube, and Bloomberg Originals. And we're rolling over our best levels of the session, but we are still seeing some gains across the board.
Yeah, we're going to be checking in with Abigail Doolittle in just a few minutes to get the latest on the trade. Also, how does this spacewalk sound to you? Would you do it?
Yeah, totally.
Yeah, this is really cool.
Yeah.
Early this morning, it's like 5 o'clock, 6 o'clock in the morning, Wall Street time. That spacewalk happening. Billionaire Isaac Min, he's did this historic spacewalk.
Private spacewalk.
Yeah. We're going to get the details from Lauren Grush in just a few minutes.
All right, we're also going to check in with Carolee Close. She's over at Accenture. We're going to talk about AI, tech, skills needed, the type of jobs that are needed. I feel like this is kind of timely, considering we got jobless claims this morning. So what kind of jobs and skills are they looking for workers, especially in this kind of AI-crazed world?
Okay, not Friday, but we're still going to be talking Top Shelf with Justin Ocean. A little bit of a...
Almost
alcohol.
Friday.
It's almost Friday.
It's Friday's Eve.
It's Friday's Eve, Friday somewhere. You know what they say.
OpenAI funding. We're going to talk
huge.
about that. Rachel Metz has a story out. Remember, there was a headline yesterday about the valuation. This is a company that everybody's talking about, speaking of AI. So we're going to get into that a little bit later on in our broadcast.
All that and more on Bloomberg Business Week over the next 2 hours. First up, though, a check of the day's trade and top business stories. Here's Charlie.
All right, thank you very much, Tim and Carol. We have got the Dow, the S&P, NASDAQ, all in the green. But as you mentioned, we're off session highs. 59 minutes to go until that closing bell clangs on Wall Street. Right to the numbers. S&P now up 38, 55.92 was above 5,600 a few minutes ago, up now by 0.7%. The Dow up 147, up by 0.4%. A 1% jump now for NASDAQ. The Russell 2000 doing a little bit better. Small cap shares up by 1.2%. 10-year at 3.67% with a 2-year 3.64%. Gold surging $44 the ounce to $25.56. That is a gain of just about 1.8%. A big rally for crude as well, 69.15 on WTI. West Texas Intermediate crude now up by 2.7%. A rally that's already added over $1.3 trillion to the S&P 500 index this week is powering ahead as the latest economic data does little to alter bets on Fed rate cuts. As for the market backdrop, given the outlook for the Fed, Nadia Lovell is senior strategist at UBS Financial Services.
You've got to put cash to work. I mean, the Fed is about to cut. We know that debate is still there, whether it's 25 basis points or 50 basis points, but the cutting cycle is starting, and therefore, what you're going to be able to yield in cash is going to continue to go down. And so we would look to be adding some of that cash into quality equities and also a bit into fixed income.
And you can hear more of the conversation with Nadia Lovell on the Surveillance podcast. You can download it wherever you get your podcast. Big day for Boeing, Boeing shareholders and Boeing workers. Members of Boeing's largest union voting today on the first comprehensive labor contract in 16 years. BA, Boeing up now by 0.6%. Just talking travel, Delta up 0.3%. It expects its full-year profit to be at or above the midpoint of its prior guidance. Alaska Airlines up now by 1.1%. It has boosted its outlook for third-quarter profit. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Stocks were struggling earlier in the session. No longer, as we just heard from Charlie. Abigail Doolittle is Bloomberg News Markets correspondent. She joins us here in the Bloomberg Interactive Brokers studio. You were saying, as you were looking at the S&P 500 chart just now, wow, what a chart. What's
It is
going on?
quite a chart. If we take a look at this chart, there's lots of interesting signals. So the monthly chart has an RSI that was slightly overbought at one point, but is now rounding down, and there's a configuration of candles. So long as the S&P 500 is below, according to this chart, below its recent high this year, it's just off. It really is off. The pause that we have now seen for essentially 3 months after a pretty robust uptrend tells you that neither the buyers nor the bears know what to do. They're stuck in this range. And so there's just so many different events that we could try to connect this to in terms of fundamentals. So of course we have the Fed coming up. What will their commentary be? How much will they cut? How much will they talk about cutting? There's economic data. There's also going to be earnings season, if you can believe it, starting in less
We're
than
not even done with earnings.
I know.
These
earnings seasons are ridiculous.
It's so funny that you said that. Was it yesterday? I pulled up JPM and looked at when does their earnings come out?
It's so soon.
Soon.
It's soon. Yeah.
Is there something interesting in
And the
terms
election, by the
of
way.
the equity trade, especially as the Fed is getting ready to reverse course and change monetary policy in terms of now cutting rates, right? They haven't been doing that for a long time. So I just wonder, is there something that happens in terms of the equity trade as it's kind of a little unsure when it's going to happen, how it's going to happen?
Well, what stands out is the old adage, sell the news, because it's interesting that we've had this big rally all year long. So about a year ago, if you recall, we were talking about six cuts, and then it got trimmed down to, I think, 1 at one point this year, but stocks nonetheless were going higher. Now all of a sudden we have 2 to 3 priced in for the year essentially, and stocks are paused. So it seems as though investors priced it in earlier in the uptrend, and now they need to make sure the Fed actually delivers. Like, what if the Fed only does 1 cut this year, and everybody's thinking about 2 or 3, or what if the data changes? That would be, I think that's probably the really big part of the pause.
Okay.
How do you look at individual companies as a signal for what can happen on a wider index level scale?
Well, certainly your NVIDIAs of the world, the Apples of the world, the Microsofts, the ones that have big point weighting. So NVIDIA right now, the reason that we're in this 4-day rally for the S&P 500, the NASDAQ, and the New York FANG Index is the NYSE Plus FANG Index is, to the best of what we're seeing is NVIDIA up. You were mentioning it yesterday, Carol. Over the last 4 days, now up about 16%. I think it's come out of its bear market. What NVIDIA is doing is going into a major range. A range tells you it's a battle between the bulls and the bears. It's a converging point. Neither side has more information to really break up and out of the last high or below. What's important about a range is not the range. I mean, the range is interesting. It tells us traders don't know what to do after a 180% rally year to date.
It's like an even battle, right? That's going on.
Describe the spacewalk because this SpaceX spacewalk wasn't the typical spacewalks that we know from decades ago.
Right. Yeah. I think most people, when they think of a spacewalk, they probably think of well, not even decades ago. We still do spacewalks pretty frequently now, but you probably think of, astronauts floating in the void of space, or perhaps even walking on the surface of the moon. This one was really mostly a test to see how the new spacesuits that SpaceX developed held up in the vacuum of space. So they didn't fully emerge from the Dragon capsule that they were in. They did kind of just poke out and do some mobility checks, but it was still extremely valuable information for the company.
Open the hatch, check the weather.
Yeah,
see what's going
basically
on.
just peek out, through the sun. I mean, from what we saw, it seemed like they did well. It was a lot of, moving the arms. I mean, that's really what you need a spacesuit for, right? You have to have it be mobile. You'll likely need it to fix things, grasp things. And that's really difficult because the way that a lot of people describe what a spacesuit is it's a human-shaped spacecraft that has to have like a full atmosphere inside for you in order to survive. And that doesn't bring a lot of motion with it, because when you have that pressurization in the suit, it's big, it's bulky. And so being able to design something that can keep you alive and is also flexible is an extreme engineering challenge.
I feel like this is so interesting from so many different aspects. Again, the private sector involved in some area of the space, and it also just then Elon kind of expanding his offerings when it comes to space exploration. So talk to us about both of those.
Well, yeah, I think the question is where does it go from here?
Yeah.
I don't think we quite know the answer to that question yet. We've asked a few times, and I think it's more about having that capability in case they need it. The way it's been described to me, and the way I think the answer that SpaceX will give, is that their goal is to have people living and working in space, right? Ultimately going to Mars someday, having people on the moon. And so they want to have the option of a spacesuit that they can scale. No, so to be clear, that this spacesuit was just for walking in the void of space, but they probably would want to expand upon this spacesuit design in order to do moonwalks, to do Mars walks, So being able to test it in this environment is just the first step.
I mean, having a spacesuit is not a new thing, but is this just on a whole other scale?
It's not a new thing, but it's new for SpaceX, and it's a different type of design. I mean, if you look at this spacesuit and you put it next to the typical spacewalking suit that NASA has, I mean, theirs is huge and bulky and big. This one's very sleek and has different ways of connecting the parts together than the ways that NASA does. So it is a different type of design.
And we actually are showing for folks on YouTube and Bloomberg Originals. You're right.
There you go. There it is. Yeah.
It's like a lot more close fitting. I feel like it's like the rethink with maternity wear. Remember when it was like huge and bulky, and all of a sudden it became like, sorry, I know that's extreme, but it's interesting.
No, I mean, and it falls in line with SpaceX's kind of motif, right?
Yeah.
Like Elon and SpaceX are all about aesthetics. So as much as they are about function, they very much care about what things look like, and you can see that in the design of these suits. And they're also white, which is a very SpaceX heavy design element.
Lauren, talk to us a little bit about this process of pressurization, depressurization in the actual craft, because typically with a spacewalk, there's a part of the spacecraft that gets pressurized and depressurized, but they had to do this for the whole thing.
Right. So that was such an interesting aspect of this flight, and one I had the most questions about when they first announced it. But yes, when astronauts leave the International Space Station, they go through an airlock, and so they don't actually open up the door and expose the entirety of the interior of the International Space Station to the vacuum of space. They go through a door that seals them off, and then they're able to go outside. With this demonstration, all 4 of the crew members on Polaris Dawn, the name of the mission, had to wear these new suits because when they opened that door, there was no barrier between those who went out and those who didn't. The entire interior was exposed to the vacuum. And so that came with it a number of engineering challenges. They had to basically reinforce the interior of the Crew Dragon, because normally when they launch people in this vehicle, it just goes straight to the International Space Station, or they stay in orbit. They don't open the door. And so that they basically had to redesign the interior a bit to make it work for this specific mission parameter.
This mission also pretty remarkable in terms of the altitude it hit, correct?
Yes. So they didn't perform the spacewalk at this record altitude, but on Tuesday, they raised their orbit to, I believe it was around 1,400 kilometers. And that broke a distance record that we haven't done since the Apollo program. And so the women on board this flight, Anna Mignon and Sarah Gillis, both are now record holders for the women who've traveled the farthest from Earth. So that's pretty neat.
Let's talk about Jared Isaacman, because he's a big character.
Yes.
In not just in this mission, but also in space.
Yeah.
In aviation
And recently.
too.
Yeah. No, I mean, me personally did not really know of him until 2021, when all of a sudden they announced that he had bought an entire Crew Dragon mission and that he was going to fill it with civilians. And then less than a year later, they became the first all-civilian human space flight to go to space. So he's definitely become a very interesting SpaceX figure.
People might not know about him, but they probably have used his technology and his product without even knowing.
Yeah, he's the CEO of Shift4, which is an online payments company. And I think it's one of those things that I think is silently running in all of your transactions, but you don't really know about it.
How do you continue to think about space travel when it used to be such a government-controlled thing, and increasingly it's moving into the hands of Elon Musk and others? We talk about you in a big way have talked about and written about the private space race. Does it just continue to go that way, and is it more innovative and moving faster as a result?
Well, I always like to say that as a space journalist, it's the most exciting time to be covering this industry, just because there are so many companies that are pursuing this, and we have seen kind of the rise of SpaceX in recent years. I mean, they've gone from, kind of a plucky startup to really dominating the commercial space industry. And so that has been really interesting to witness. I think NASA is still a huge player in this area in terms of guiding the direction in terms of what we're looking towards. So, for instance, NASA's Artemis program is looking to send people back to the moon. So you've seen a lot of startups and companies focused on going to the moon recently because they're kind of taking the lead from NASA. But yes, absolutely, we are seeing a very big shift from NASA being the dominant player to companies like SpaceX taking over the capabilities that used to be exclusively government run.
At the same time, you're seeing a decline of space programs at a company like Boeing, for example. That's happening at this same time.
Well, I think we're seeing a shift in the dominant players in the commercial space industry. So for a time, it was definitely...
And it feels like the traditional
Traditional,
guys.
yeah. There's a term that we like to use, like old space and new space. So a lot of these contractors...
I'm sure the old space
I'm sure they love me saying that. But it used to be dominated by defense contractors.
Yeah.
But it wasn't companies. Companies did all sorts of activities, right? They did, defense, aviation, things like that. Whereas we're now seeing vertically integrated companies like SpaceX solely dominated on space ventures. That, I think, is kind of the shift that we've seen.
Just got about 30 seconds. We've talked so much about the billionaire space race, right? Whether it was Elon Musk, Jeff Bezos, and others. But it does feel like, is it now really Elon dominating the space, as he often does? And forgive me, because it's just about 30 seconds.
It's hard to ignore. Yeah, absolutely. I mean, SpaceX dominance is a term that
Richard
I
Branson
laugh at.
was another one.
I know. Well, yes, but in terms of numbers and figures, yes. And SpaceX is by far the dominant player in the space industry right now. So there are others up and coming. I'd like to see more because that's only good for the industry and the economy. But yes, it is hard to ignore the sizable impact that SpaceX has had.
Well, pretty cool stuff, as always.
Lauren Grush, always good to see you. Bloomberg News space reporter. Check out her work and more at Bloomberg.com and on the Bloomberg Terminal. Up next, we're talking AI and jobs. Is yours at risk?
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Do want to begin with a headline off the Bloomberg Professional Service. Donald Trump says there will not be another debate with Kamala Harris. In a post moments ago on Truth Social, the former president said, quote, there will be no third debate. We got stocks higher just about 39 minutes to go ahead of the close now with the Dow, the S&P, NASDAQ off session highs, but still very much in the green. S&P right now up 39, 55.93, up by 0.7%. The Dow up 170, up 0.4%. NASDAQ up 180, higher now by 1%. The Russell 2000 index of small cap shares up 1.2%. 10-year 3.67%, with the 2-year 3.64%. Gold up $44 the ounce to $25.55, a gain of 1.8%. And West Texas Intermediate crude up 2.8%, $69.19 for a barrel of WTI. A rally that's already added over $1.3 trillion to the S&P 500 this week, powered ahead as this morning's economic data did little to alter bets on Fed rate cuts. As for Fed expectations next week, Lindsay Piegza's chief economist at Stifel Nicolaus.
I do think a base case is 25 basis point cuts, and not necessarily at every meeting. The Fed is going to remain data dependent, and if we see inflation stumble for back-to-back months, as we saw in yesterday's and today's reading, I think they're very likely and very willing to skip a meeting.
Lindsay Piegza of Stifel Nicolaus. Norfolk Southern has fired CEO Alan Shaw after an investigation found he violated company policies by engaging in a consensual relationship with its chief legal officer. Norfolk Southern shares up now by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks, Charlie. Do appreciate that Bloomberg Business Flash. You might remember this, Carol. Over the summer, Citigroup came out with a study. They said AI is likely to displace more jobs across the banking industry than in any other sector. As the tech is poised up in consumer finance, it's going to make workers more productive. About 54% of jobs across banking have a high potential to be automated, the bank said in that June report. An additional 12% of roles across the industry could be augmented with the technology, Citigroup found. This is Carolee Close's world. She's global talent and organization lead at Accenture, where she works on projects that use data and tech like AI to figure out new ways of work, new ways to work. She joins us from Victoria, British Columbia. Carolee, good to have you with us. Are we approaching the conversation about AI correctly or incorrectly when it comes to work?
It's a great question. I think it is correctly in that it is fundamentally changing the way that work gets done, and it is fundamentally changing the jobs. But I think the narrative ends up being a little negative, the job loss. I think we're going to need to learn new ways of working with technology, as we've done with spreadsheets and other applications. And we're going to need to learn alongside this new technology. But, you know, I do think it's going to be one of the more fundamental shifts in the working world over the next few years.
Can you walk us through some of the specific examples that you guys are seeing maybe at Accenture specifically on how it's changed AI, generative AI, large language models, how it's changing how you guys work already?
Yeah, so I think it's quite publicly known. We've got over 1,000 client projects with Gen AI. We're also using Gen AI in the delivery of our work quite extensively. And some examples of that, I guess in the client side of things, we're seeing a real movement in call centers and in marketing, where the combination of data, AI, and Gen AI is actually creating new ways of solving customers' issues, whether that's whether you need a call center in the first place or how you handle calls, to how you manage content and marketing messaging and the like. Internally within Accenture, we're exploring the use of AI and Gen AI in everything we do, from how we understand a client's issues, from external data to how we actually deliver projects and work.
I want to ask you about call centers, only because I've gotten lost in a couple over the last week or so. So
like
what,
physically
like
lost, like you're walking around call centers or you're calling numbers?
kind of lost my mind.
Yeah, I think that happens to everybody.
Where it's like, you're talking and it's like, well, I want to know more. Like, is that what AI, generative AI is? If we don't have, like, I'll be honest with you, I just kept like hammering until I could get to a human, and then a human that got me to a supervisor to really resolve a problem. And I wonder, what does generative AI mean in terms of call centers, and especially if it means reduced humans? Is it just a case that I keep getting options and drilling down? Is that what it's all about? Because there are times where you need a human's brain to kind of understand what you were talking about. Not every problem fits into a box.
Yeah, and I think that's exactly right. And when you think about it, a call center is set up to resolve an issue that should have maybe happened in the first place. Quite oftentimes, I think, you couldn't say, well, let's just, add AI to an existing construct. But I don't think that's the real impact. I think the real impact is really reimagining the way that work gets done. So really reimagining what happens in a call center and what doesn't, and how you use the technology to amplify the experience or improve the experience that a customer or an employee would have, is sort of where we're seeing the big impact. But we're seeing actually about 40% of working hours will shift as a result of using AI and Gen AI. And so really, we encourage clients to really reimagine work and reimagine the skills that you need to do the work. So, fundamentally, what happens in a call center should be reimagined, not just, automating the call flow that happens, but really more fundamentally redesigning processes so that the humans are doing the really value-added activity and the technology does the other things.
I'm wondering, Carolee, when you look out at the landscape, given all the work that you've done, how much you know about the space, what's a company out there that's doing this really well?
Well, we step away from making specific examples of individual companies, but I think the companies that are doing this really well are they're reimagining the way that work gets done, and they're not layering new technology on old problems, but they're really solving the problems in a different way. And in that, they're redesigning the work and they're adapting the workforce, so the skills that happen within work. So we're finding actually that 95% of people are really ready to learn new skills to work with Gen AI, but only 5% of organizations are actually changing the way the workforce shows up, actually reskilling their workforce. And so while the companies that are doing this well are not just saying, well, add Copilot or add a piece of Gen AI onto an existing workflow, but they're really fundamentally redesigning work. And they're revisiting their learning and talent strategies to give people access to the opportunity to develop much more quickly. And there's a real gap between the skills that we need in the future and the skills that we have. And so the leading companies are really adapting their skills and learning organizations in order to provide opportunities for people to learn and grow at their organization.
Carolee, one thing I do, so I'm listening to you talk about what organizations need to do to kind of reskill workers or make sure their workers have the right skills. So in a generative AI world where people are working hand in hand with, or some workers or call center individuals who work there are working with AI, do they need college degrees? Is it a case they get to a company and they get trained? Like, how are we thinking about what skills are really needed?
Yeah, and it's a very good point. I mean, I actually think there's a whole reinvention of talent and learning that will happen as a result of this, which can be quite exciting because a more fluid opportunity to develop at a different pace is going to be exciting for workers. A good stat is like 61% of workers are globally going to need retraining by 2027. That's not too far away. And so that whole, like, I go to school, I learn something, and then I get hired to do a job. And leading companies are really thinking about that differently. So thinking about the skills that they have, the characteristics of the people that they're hiring, and how to develop those skills at a different rate. So giving you a differentiated learning path. And that learning path isn't just about going to training. It's about a different experience that you have doing the work that you're doing, and a work-learn fusion, we like to call it. So the opportunity to learn on the job and be provided with new opportunities to not only learn, but also develop skill is, I think, a source of innovation and resilience for companies that is going to require another level of innovation around corporate learning and development, and also career paths to provide people with flexible opportunities to develop skills, and particularly help people develop skills in directions that meet workforce need. If you think about 5 years of workforce planning, a lot of organizations will do a multi-year plan. I think we're going to see a lot more near-term understanding of the skills you have, the skills you need, and then flexibility in adapting those skills, whether that's sourcing them from different locations or whether that's developing them internally. And that's going to be a source of advantage for the companies that get it right.
Hey, Carolee, if you were advising recent graduates from college or people who are entering college right now, or even people in high school, because maybe college isn't even part of the equation for a career like this or a world like this, what would you advise them to do?
Yeah, I think I would advise people to, I have a child that's going to start college very soon, and so it's a very near term piece of advice. I think the opportunity or the willingness that you have to learn and innovate throughout your career is going to be important. So learning to learn. And learning to adapt the skills that you have is going to be important, right? So 90% of CEOs say that talent scarcity and lack of skilled workers is going to be one of the top 5 business issues. So being able to learn on the job and being able to be flexible and innovative and creative. The other thing is, I think the technology is never going to replace things like empathy and creative activities. And so thinking about how you enhance your emotional intelligence and your aptitude for learning is going to be as important as which college you pick.
I like that.
Yeah, interesting. Hey, 30 seconds, just quickly. The work, your demands or hiring, anything that you're seeing that's a slowdown, that you're not seeing as much workers, because we're starting to see that in some of the statistics, and just got about 25 seconds.
Yeah, there's a slowdown in some sectors and an uptick in other sectors. And actually, if you sort of go into it, there's different geos where you're seeing up and down. We are seeing, I think, a continued demand around technology skills. And I think that's a strong signal for us going forward.
Carolee Close, thanks so much for joining us on Bloomberg, Global Talent and Organization Lead over at Accenture. Carol, I know you're looking closely at some headlines breaking.
Yeah, just a quick one. Not a ton of information, but let me just walk you through it. Izzy Englander's Millennium Management looking to raise between $7 billion and $10 billion of new capital in a structure aimed at giving the hedge fund firm a more permanent source of capital. Actually, there is now a write-through on the Bloomberg, so check it out. Like many of its peers, Millennium has been moving to lock up client cash for longer. So check out that story. Head to Bloomberg.com or find it on the Bloomberg terminal. This is Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks holding on to gains. 20 minutes to go ahead of the closing bell. But right now, let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are adding to yesterday's big reversal gains, with the Dow currently up 218 points. S&Ps are higher by 42, and NASDAQ gains 171 points. The U.S. 10-year yield at 3.68%. Gold trades to an all-time high. Oil is climbing, and Bitcoin, that's up by 1.6%. Among the main 11 S&P sectors, leaders for telecom and consumer discretionary, only real estate was in the red, and leaders to the upside in the Dow, Amazon and Caterpillar, while Intel fell 1.7% and led to the downside. In the banking space, Wells Fargo fell as much as 6.5% as the OCC issued enforcement action on the bank's risk controls. And in other news, Point72 plans to return some cash to investors for the first time. Wrapping things up, Adobe reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
All right, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg type squawk, SQUA on your Bloomberg terminal. Briefly, Republican Donald Trump ruling out appearing at another debate with Democrat Kamala Harris 2 days after he delivered an uneven performance at their first showdown of the election cycle. On his social media platform, Truth Social, Trump said in all capitals there will be no third debate. For on-demand news 24 hours a day, subscribe to Bloomberg News now or wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
It's that funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes left in today's trading session, getting ready to wrap up that Thursday trade. Bouncing around, but we're just a little bit off our highs of the session. So as you heard from Charlie, still about 1% higher on the NASDAQ 100, S&P 500, a gain of almost 0.8%. This as we got another read on inflation, a read on weekly jobless, that coming in a little bit weaker. Slightly hotter on the inflation print, another 2 days in a row, slightly hotter inflation prints. And then we've got the Fed meeting next week.
So let's go to one of our go-tos back with us. Aaron Kennan, he's co-founder and CEO over at Clear Harbor Asset Management. They've got more than $1.5 billion in assets under management. Joins us from Stamford, Connecticut. Aaron, good to see you. Happy, I don't want to, it's not the end of summer yet, Carol. You know, officially,
it's
but
close.
Happy, like, almost end of summer.
The days are getting shorter. The
They
leaves
really
are rustling. The acorns are falling. I know.
This. Okay.
I know.
Anyway, Aaron, next week, Jay Powell, 25. Is that what's going to be?
It looks that way. Although there's 100%, 100 basis point cut between now and year end priced into the Fed funds futures market. And so that would suggest that at some point, if the market's correct, we would need to see a 50. I think a 50 next week could do more harm than good. It seems as though the crowd of FOMC speakers prior to the quiet session that we're in now have intimated that they would embrace a cut. The data, as you just alluded to earlier, PPI, CPI, has certainly trended back towards the 2% target that the Fed has, but it's not there yet. And we experienced in early August what currency volatility can do to overall capital markets, particularly equities and fixed income, when we saw that sort of yen carry unwind occurring. And so I don't think a 50 basis point cut would help in that regard. And I think the Fed is very much inclined to go 25 at this point. We'll have to see.
Hey, I think about, you co-founded your firm, you are the CEO of your firm, and I'm just wondering, since the beginning days of it and your time and money management, what's more difficult about investing today? What's easier?
Oh my gosh. Well, there are many more products in the marketplace, and so that can be a huge opportunity because those products mean that there are different strategies, but it also, as an allocator of capital on behalf of clients, can be a rather significant distraction. So I do think that that's something that we as a firm need constantly remind ourselves of, because our day-to-day is, working on behalf of our clients and being fiduciaries to them. So I think that's one variable that certainly is different. The growth of alternatives, the democratization of alternatives, and that's a plus. But we sort of approach lots of things with skepticism, including the market itself. We don't own everything. And so, parsing through more in this day and age around these new products is certainly challenging.
Okay, speaking of uncertainty, moving forward, we haven't talked about the debate today yet, Carol, but it's still...
We really haven't.
But there's a Reuters poll out that just came out in the last couple of hours that actually shows some gains for Kamala Harris post-debate. We'll probably get more polling on that in the coming days. But I do want to bring that question to you, Aaron. Uncertainty around the election and sort of how you're watching this from an investment perspective.
Well, that's a big one. I mean, certainly we've seen some ebbing and flowing on the polling side. This debate was clearly a weaker one for the former president, a stronger one for the current vice president. I think there are questions around spending, but that doesn't seem to be something that either candidate is focused on. There are concerns about the growing debt to GDP or deficit. Again, not a topic du jour for either candidate, which is just stunning at this moment where debt to GDP is 120% and growing. And we wonder why gold's reaching all-time highs here today, up 1.5%. And so I think tariffs will be a big question. But again, it's been interesting. The tariffs that the former president has placed on countries and products, many of those tariffs are still in place. So are we going to really have a changing of the guard, regardless of who wins on the tariff front? It will be very interesting for us to monitor that. I think the regulatory environment is an area where I think, should expect a bit of a change. If the former president wins, generally less regulation. I think the question around the sustainability investment that came out of the Inflation Reduction Act around solar products need to primarily be made here in the U.S. For example, maybe a big question mark if he were to gain in the polls. We could see some of those stocks come under pressure. Post-debate, we actually saw those stocks yesterday rally quite significantly, and I think that was an indication that, well, maybe Kamala Harris is in a position to possibly win the election. We'll have to see.
Hey, listen, do you think, Aaron, this happened at the end of last year, right? Investors were saying, we're going to get 6 rate cuts. It's going to be pretty aggressive in terms of the Fed. Well, it didn't happen, right? Here we are. That was the end of last year going into the beginning of 2024. Here we are, mid-September of 2024, and we're still waiting for that first rate cut by the Federal Reserve. It's expected next week. That expectation around 100 basis points of cuts, do you think there's a good chance that's way too aggressive still?
It could be, although it could break the other way if the data were to suggest otherwise. If the employment picture were to not just soften, but look like maybe it's breaking a little harder. If the jobless claims were to spike further, they've been rising but spiking further. The unemployment rate were to accelerate to the upside even more than it already has over the last 3 months. And so, I think clearly, that's of concern. On the flip side, I mentioned tariffs. If increased tariffs had an impact on the economy in raising prices, that could put the Fed on watch for maybe being a little less hawkish. And, so we'll have to see on all of those fronts.
What about geopolitics?
Oh my gosh. Well, we certainly monitor what's happening. I mean, certainly the economy in Europe is quite weak. Germany in particular, largest economy in Europe. We're keeping our eye on that. What is happening in Ukraine and the sort of Western world working with Ukraine in its response to its Russian invasion. How we're dealing with China and what that may mean too for how we think about the dollar. China may be hesitant to buy dollar-based fixed income assets to bolster their reserves after looking at how, and this is not a criticism on my part, it's just an observation, but how the West has dealt with freezing Russian central bank assets after the invasion of Ukraine. All these things have huge impacts on the sort of dollar's ability to maintain its rightful, I believe, place as a global reserve currency.
All right. Really appreciate it. Aaron, take care. Aaron Kennan, back with us, co-founder, CEO, Clear Harbor Asset Management, joining us from Stamford, Connecticut. All right, folks, you are listening and watching Bloomberg Business Week.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Business Week. I've got an important message for our listeners, our viewers, our friends out there in San Francisco. Starting October 1st, the place to listen to us in the Bay Area is on the Bloomberg Business app. It works seamlessly in your car with Apple CarPlay and Android Auto. Make the switch today because October 1st, Bloomberg Radio is streaming directly to your phone. The Bay Area's new home for Bloomberg Radio is the Bloomberg Business app. Download it for free in the Apple App Store or on Google Play. And Carol, you don't even have to live in San Francisco or the Bay Area to use the Bloomberg Business app.
You can kind of be anywhere, can't you? Isn't that the whole idea?
That's the whole idea, yeah.
Which is pretty cool stuff. Like radios in car, like things have changed.
What is this you're saying?
I know. Listen, speaking of what am I saying, we've got about 6.5 minutes left in today's trading session, and it is pretty remarkable that we have seen a decent rally. We are looking at the S&P 500 up more than $1.3 trillion this week. That has been investors moving up and into stocks ahead of a big Fed meeting next week when we do expect a pivot finally, where we get our first rate cut by the U.S. Central Bank. Expectations have wavered a little bit as we've been counting down through a few economic reports, including an inflation report yesterday and today, a little bit slightly hotter, but nonetheless so the thinking is maybe not a half a point, but more of like a quarter of a point. There's this fine balance, and as the Fed gets ready to pivot, it's not an exact science, and so they want to make sure they've got it right.
So what ends up happening after the meeting? That's the big question I have.
Oh, you mean in terms of the press conference?
No, in terms of like the path forward for rates toward the end of the year. 100 basis points priced in. We just heard that from Aaron Kennan.
Yeah.
But what's the path look like? Do we see a 50 basis point rate cut anywhere? Do we just see consecutive 25 basis points?
2 words for you.
Are they a dot plot?
No, data dependent. Although dot plot's interesting too, but data dependent. Like I think once again, there's not much going to change potentially around the narrative unless Jay Powell in that press conference comes out and says, we're seeing significant slowdown in the labor market. We're a little bit worried, or more people are, companies cutting back on CapEx. I mean, this is why we joked earlier with Abigail Doolittle about, okay, wait, when's the next earnings season? It's just a few weeks away. But, you get more insight about what companies see about the future. Are they comfortable enough to spend CapEx, do deals, so on and so forth, hire? Those are important metrics.
And how are consumers doing? I liked our chat with Haley Berg over at Hopper. She's a lead economist there. We talked to her a little earlier in our program, and she mentioned to us, Carol, that you asked the question about whether consumers were cutting back. And I thought her answer was really notable because she said, okay, we're not seeing them cut back on travel. We're seeing them cut back on other things in their lives, but they're still spending money on travel.
So they're making choices, right?
They are, but that still seems to be pretty discretionary. If you're going somewhere on vacation, you're choosing to fly to Tokyo.
Yeah.
That's a lot of money.
Yeah,
that's
that is
a big outlay.
Like, what do? You're still going to pay, either a mortgage or rent. You're still going to put food on your table.
You're going to still pay your insurance.
Right. You're not saying, you know what, we're going to take a trip to, Aunt Ginny's, and we're not going to do something like that.
So where are you cutting back? That's what I want to know.
Yeah, I don't know. Maybe not spending as much on clothes. Maybe you're not spending as much on
buying the $8 latte every day.
Not going out for dinner, perhaps, right?
Unless you're on vacation.
Yeah, because then you're going out for dinner. Yeah, I don't know. I think she was pretty upbeat, I felt like, in terms of travel. So we shall see what happens. I don't know. We're going to wait and see on that. Because, Mike said we're going to get another sentiment. We'll get an idea of consumers. We'll get another sentiment reading before the Fed meeting next week. So we'll get a little bit of a feeling in terms of consumers, whether or not they're upbeat and continue to spend.
Get that on Friday. University of Michigan sentiment coming in 10 a.m. on tomorrow. That's tomorrow, Carol.
Yeah, well, today's
Friday the 13th.
It's really funny how first of all you get Thursday, then you get Friday the 13th.
I was just kind of shocked about the Friday the 13th.
Are you superstitious? Are you superstitious? No, I'm not.
Everything will be okay.
But I don't walk under ladders.
All right.
I don't walk under ladders. And if I see a black cat, I get a little freaked out. Especially if it's not Halloween. Or no, if it is Halloween, then I really get freaked out. All right, not to worry though. We are coming to the close of trading on this Thursday or Friday's Eve, as we like to talk about. We're heading over to our TV colleagues. Our cross-platform coverage on the markets, we call it the closing bell. It starts right now.
Vulgar market coverage starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele taking you to the Closing Bell, a global simulcast. It starts right now with Scarlett Fu in the television studio, Carol Massar in the radio booth alongside Tim Stenovic as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube, a fourth straight day, Carol Massar, of gains in U.S. equities.
Pretty remarkable, right? And I thought it was interesting. I heard you just getting into this, that the Russell, the small caps outperforming. So interesting to see investors kind of spreading out and pushing even that index higher than some of your larger cap indices.
Okay, so next week we get the Federal Reserve press conference and, of course, the decision. Scarlett, 25 basis points after today's data, is that pretty much locked in? Is that how you're seeing this?
That's what's baked in at the moment, although a lot of people are expecting 100 basis points cut overall for this year, which a lot of people still say strikes them as a little bit too dovish. But, this market has been a bit too dovish all along, and, the Fed hasn't even begun doing anything yet.
Guys, NVIDIA has the power of a central banker. Okay, that's what this is. That's from Charlie McGilligan of Nomura. I've been talking about it all hour on TV. If that moves higher, you get the FOMO, and then you get the catch-up.
Yeah, and it gets into the question, too, is we talk about this idea of sort of what the next catalysts are, and I'm glad you bring that up, the idea that maybe that catalyst really isn't as much the Fed, particularly given how much of already is priced in. It really is going to go back to the corporate fundamentals, and of course, the one fundamental that matters, which seems to be chips and AI.
Exactly. Like, okay, maybe you buy the Russell if we get into a Fed cutting cycle, but is that a little different than the FOMO buying that we see when it comes to NVIDIA?
Here's the date for you guys, November 21st, NVIDIA's next earnings.
All right, a slight uptick in yields here on this day, Carol Master, which I believe is September 12th, but thank you for the update there. A bit, crypto also getting a bid here on this day. The dollar down, the VIX down as well, but stocks green across the screen. The Dow up about 0.6% here on the day. The S&P higher by about 0.8%, right back up to that 5,600 level, a level that Jay Woods was just talking about that could be a bit of resistance for this market. The NASDAQ up about 174 points or 1% on the day. And there's your outperformer, believe it or not. The Russell 2000 adding 26 points or 1.2%.
Yes, indeed, it is Thursday, September 12th. Tomorrow, by the way, Friday the 13th. Having said that, going back to the big caps, S&P 500, Scarlett, 372 names gaining ground. So we saw a fairly broad-based buying in today's session, 130 to the downside.
Yeah, you see that reflected in the IMAP, which of course looks at the S&P 500 and its 11 sectors. Spinach pie, pesto pie, all around for everyone. All 11 sectors in the green, led by communication services, which is really media and entertainment companies like Warner Brothers Discovery and Charter Communications. Energy stocks recovering a bit because they have been the laggards here for the past 3 months, the past 6 months, for this week. Today, in terms of the weak links, you have REITs and financials trailing in that they're only up by 0.1%.
All right, let's get to some of the individual gainers. And you went right there in terms of media companies, Scarlett, for me and setting me up so well. Warner Brothers Discovery, folks, #1 gainer in the S&P 500, finishing just off its highs of the session, but still a gain of 10.4%, a top name in both the S&P 500 and the NASDAQ 100. CEO speaking at a Goldman Sachs conference today, saying it has signed a new multi-year distribution deal for all its cable channels. The company came out and said that with Charter Communications, so renewing early. Warner Brothers also saying Charter paying higher prices for channels, so you can understand why investors interested certainly in that one. Another one that is top in the S&P 500, Kroger, specifically the grocery store. We know who they are, right? They talked about second quarter gross margin expansion. That impressed Wall Street. They also lifted their full year guidance. This is the company says it's benefiting from consumers prioritizing spending on groceries and other essentials. The company's still defending, as you know, its proposed $24.6 billion acquisition and deal for Albertsons. They're doing that in court. One more for you. Broadcom, a top gainer in the NASDAQ 100. Bernstein out with a note saying Broadcom and NVIDIA remain top picks in the semi-sector, and they have outperformed ratings on both. I know earlier, Alex, you talked a little bit about NVIDIA and its help in pushing the equity markets higher over the last couple of days.
Okay, you got the easy job today, Carol, with finding the stocks that moved higher. I'm looking at the stocks that moved lower today. Micron Technology shares lower today. The company extending that recent sell-off, this after BNP Paribas warned that the stock would continue to underperform others connected to AI. We're talking about Carl Ackerman, who downgraded the stock by 2 notches to underperform from outperform, becoming the only analyst tracked by Bloomberg to recommend selling the shares. Shares falling by 3.8%. Ticker mRNA Moderna. I think I saw Jerry Smith on your air a little earlier talking about this. Shares fell after the company.
Tim.
You're welcome.
Appreciate it.
I multitask. I tune in. You listen to our show, right?
Absolutely.
Okay, good.
Every time
you know, we
I'm
talked
in
to Derek Jeter a little earlier.
Oh, we saw.
Yeah.
Scarlett definitely saw.
Yeah, he was on our show. That was a fun one.
I walked behind your studio a couple of times, you know.
Nice guy, super nice guy.
Did you call him the captain?
No.
Did we?
I did not.
No.
We did not. Should we have done that, Scarlett? Where
Next
were
time.
you next time? No.
This is why you need me.
Yes,
I know.
this is true.
We always
Invite her
need
next
you.
time.
All right.
Okay, I'll get back to Moderna, though. The company said it's aimed to reduce its research and development budget by 20% over the next 3 years. It's looking to find a path to profitability following those disappointing vaccine sales. They're discontinuing 5 programs in the pipeline, slowing some late-stage studies of treatments for latent and rare diseases to achieve that $1.1 billion cut from the R&D budget by 2027. They said this in a statement a little earlier today. Looking for a second day in a row at DJT, Trump Media and Technology, down 3.6% today. Continuing its post-debate slide, hit an all-time low since it went public via SPAC back in March. The company operates True Social. Donald Trump is its top shareholder, down more than 75% from those all-time highs. September 19th is when that lockup period expires. And then I do want to take a look at what happened to shares of Wells Fargo, finishing the day down 4%. The bank did reach a deal with the Office of the Comptroller of Currency, requiring the lender to beef up systems for detecting money laundering and complying with international sanctions, happening a little later in the session today.
Yeah, you definitely see that gap down, though, when the announcement came out. And taking a look at the bond market here, selling pretty much across the board, a little more selling on the back end. You got yields up by 1 basis point in the front and the back up by about 3. There was a 30-year auction, $22 billion at 1 o'clock. It was all right. It managed. It was okay. But really, it's going to be about positioning in that yield curve, which is still disinverted by 3 basis points headed into Wednesday, guys.
Yeah, absolutely here. We're all waiting some earnings out of Adobe as well as RH. We should point out, though, first, Oracle actually now speaking at a conference here, providing some guidance going forward, and the shares popping 5% in after-hours trading. The company saying it sees at least $66 billion revenue in fiscal 2026 and at least $104 billion in revenue going out into 2029. So see, there's long-term forecasts here, but overall, you're looking at roughly about 20% growth on average on that side. Scarlett.
All right, Adobe just coming out with results for the third quarter. Revenue beating the average analyst estimate, $5.41 billion versus the consensus of $5.37 billion. EPS was $4.65 for this past quarter versus $4.53, which was anticipated by Wall Street analysts. In terms of the outlook for the fourth quarter, revenue overall missing the average analyst estimate, $5.5 billion to $5.55 billion. Analysts were looking for $5.6 billion. And digital media revenue, $4.09 billion to $4.12 billion. That range is below what analysts were looking for. And I point out that part of the business because everyone's really focused on the creative annual recurring revenue business opportunities within digital media. And that's going to be something that people are going to look up for and listen for on the earnings call.
Yeah, very much so. Looking for, on the earnings call specifically, what's going on in terms of customer buying habits. That's something that we're going to be looking for some insight from management. Keep in mind, this stock is just a little bit lower on the year, down about 3%, but it's going to be down potentially a lot more tomorrow when regular trading begins. If you take a look at what's happening in the after hours, it's down about 6.25% shares of Adobe.
Hey, do you guys remember yesterday when Carol talked about her love of Happy Meals?
Ouch, that hurt.
No, I don't remember anything. It's not personal.
I know. I'm with you on that.
As soon as she walked in this morning into the office, she said, "Did you guys see the McDonald's news?" And no, it wasn't a special Happy Meal for grown-ups.
Those French fries are incredible.
Okay, well,
I'm with you on
good
that.
news for you. The summer of deals at McDonald's is turning into a fall affair because the chain is going to extend that $5 meal deal. It debuted back in June. It's going to go into December in most U.S. markets. That's according to a statement from this morning.
I think what's really important about this, too, is that you realize that some of these fast food chains are finding competition in a big way, even for, the budget-conscious consumer. And so they're finding that they need to keep maybe these prices lower. I think this speaks to when we try to look for different metrics, right, telling what's going on with different consumers, you just show that it's a little bit tough out there.
Those fries look really good. And by the way, I had McDonald's for dinner yesterday.
Did you really?
Yeah.
What did you have besides?
I had a 10-piece chicken McNugget and fries, and this was at the Yankees game, or before the Yankees game, because I didn't want to pay for the $15 hot dog at the game.
Chicken McNuggets.
Where I saw
also
Paul
good.
Sweeney, by the way. So that's neither here nor there.
Romain's looking. Is he a little under the weather? Might he have a case of man flu?
Man flu? What is this?
I don't know. You tell me.
I don't know. I don't know what man flu is. Is this different from woman flu?
It's like I get it all the time.
You do?
To be honest, yeah.
And what you're saying, this is like a more powerful version of the flu?
Kind of wake up not feeling well, you test for COVID. You complain a lot to your wife.
Guys get sick and they're like, "Oh, I'm dying.
I know.
I need soup. I need a duh."
They need their moms.
These are all pictures of me that we're seeing.
They need their moms. That's what it is.
Anytime I get a headache, this is what I do.
Wait, I don't understand. Are you minimizing our pain? Do we not? If I prick, do I not bleed? I don't understand. What's happening?
You do, but we do, and then we go to work, and we take meds, and we take care of the kids. It's true.
Listen, guys.
Y'all are babies and you get sick. I'm sorry.
What is the Urban Dictionary Man flu is more painful than childbirth. I mean, this just makes me crazy.
Yeah.
All right.
Whoa.
A real
Hey.
quick, I know.
You said it, Carol.
Send
Thank
the
you.
emails. RH, by the way, just out, furniture. There's no easy segue. Second
There is
quarter
no
net
easy
revenue,
segue.
829.7 million. That's a little bit better than the estimate of 825.1 million. So
I have a connection. If you're suffering from man flu, you're lying on the couch.
Totally.
Purchase from RH.
But don't get that snot on the couch because RH couches are expensive.
well, and a man who has flu is like, I have to be on an RH couch because I'm really sick.
Romaine, it's fine.
There we go.
I'm sorry, I stopped listening about 10 minutes ago. What happened?
That's a wrap.
Yeah.
That's a wrap. Our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. You guys rock. All right. Alex, I know you're heading out. Scarlett and Remain continues on TV.
Oh, boy.
Sorry.
Nice.
I don't know, Scarlett, you may have to do the rest of the show yourself.
Tim and I continue on radio.
We'll
See you
call
guys.
Mom.
We'll see you guys tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That is Carol Masser.
I am. You are Tim Stenevec, I think.
You don't know what man flu is?
Don't even go there. I'm not even going to do it. All right. Listen, we spoke earlier with Accenture's Carol Lee Close about how AI and other tech will affect the workforce. But I really think about robotics and robots in particular, how they're going to affect things.
Because the big question is, what about actual robots affecting the workforce?
Yeah.
What if I were a robot doing this?
Yeah.
Not just a disembodied voice. Well, Rich Tech Robotics.
I can unplug you occasionally.
Rich Tech Robotics, as you wish, is a publicly traded company. It builds robots that clean, they make deliveries, they help with food and beverage preparation, and more. Clients include Hilton, FedEx, Nike, and the Boston Red Sox. And we're also told, Carol, the robots are even friendly.
I got to tell you, Matt, we've been excited to get to you and talk to you. Matt Casella is president of Rich Tech Robotics. He joins us from Newport Beach, California. Matt, it is really nice to have you here with us. Tell us about your company, the type of robots that you are seeing, and how AI might be changing the type of robots in the future that you're going to be involved in.
Absolutely. Thank you. Thank you very much for having me on today, Carol and Tim. First of all, I should probably say that robots do not get the man flu.
All right, enough.
Nice.
among many others. No, we're really excited at Rich Tech Robotics because we are a hospitality and service sector focused robotics and AI company. And what that really means is that our products, through a few different lines that we have, are the robots that really are going to be interacting with the general public, right? They're robots that people are going to see whether they walk into a coffee shop. Our barista robot, Adam, which is a dual-armed AI-enabled robot, could be serving them coffee. We have a variety of different on-site delivery robots, from our maitre d' that would be available in restaurants, would be carrying the food from the kitchen to the dining room, or Medbot, which might be carrying pharmaceuticals from an on-site pharmacy at a hospital up to the nursing stations throughout the facility.
Yeah.
All the way through to our various cleaning products. So we're really excited about what's to come.
We just saw the coffee serving robot. I am wondering, Brian Niccol is now at Starbucks. He was very good about automating some stuff over at Chipotle when he ran that company, Autocado. Are you guys I am wondering how, because they talk about just the mobile ordering, and it's just a lot of ordering, and it's hard for the baristas to keep up with it. Are you guys talking with Starbucks about helping them out?
You know, I can't talk about any specific conversations that we're having, but we are very excited about continuing to explore some paths into the coffee world, right? Through a couple of different ways. And what you touched on there, I think, is
Joe's
so
Coffee,
critical.
Starbucks, Joe's Coffee, Starbucks.
We'll find. You know what, Carol? I promise we'll find a coffee vendor near you so that we can put a robot as close to you as possible.
I will say, Matt, they're building an office for Brian Niccol in Newport Beach, so he won't be far from you if you do need to talk to him. Anyway,
have you driven there lately, or had an email?
He's there right now. He's in Newport Beach.
Have you emailed lately with him?
Matt, are consumers ready for this, though? Are they ready to walk in somewhere and see a robot doing this? I mean, I think, Carol, You and I were out in LA a year ago. I went to Santa Monica, and they had these little delivery robots. Then I'm like, this is kind of nuts.
Yeah. You saw them on the sidewalks?
On the sidewalk, yeah.
Tim,
are they ready? Are we ready?
I really believe the consumer is, and it's because people are seeing them more and more throughout their lives, as you just pointed to. It's more common than not that when I'm talking with somebody, they're referencing a robot that they've seen out in the world, right? So I really believe people are working for it. I think I want to go back to what Carol touched on earlier, that the ways in which we interact with food specifically and how we order food and get our food, whether it's beverages like coffee or your Happy Meal at McDonald's, right? All of those things are happening in different ways. We're ordering from our phone, we're ordering from a screen. And so what really matters is that we get our food hot, we get our food consistent, the taste is delicious. Those are the characteristics really that people are focused on, specifically when talking about food. So for me, I think it's really easy to understand that robotics and automation really can help with a lot of those things that are critical in the dining experience.
Matt, let's talk the biz, because we have an investing audience. Whenever we have company CEOs come on, people want to hear about what's going on with the stock price. We're Bloomberg. We'd be remiss if we didn't ask about what's going on with your stock price. Shares down more than 80% so far this year. What, in your view, is the market missing? What's going on?
Yeah, I think it's the enormous opportunity that we have in front of us. I think what you've seen. This is not an uncommon occurrence, right? Stocks are subject to the whims of the public market. So what we need to continue to do is tell our story about how powerful this opportunity in front of us is, the customers that we're engaging, the partnerships that we're forming, both with end users and with suppliers, right? So the big elephant in the room, right, is NVIDIA. We use a number of their products within our robots to help bring that AI to life, right? Which is a critical thing. Everybody's talking about AI and the power behind it, and I think that comes in a couple different ways. For us, really, it's how that AI will help the customer interaction, the food production, et cetera, but also comes on how we're able to train robots so much quicker for any type of environment and really be able to get them, trained to operate in new and dynamic ways.
So what moves the needle that you think gets investors more excited about the company? Because you know how it works. I mean, we've said this before with companies that are really small. I mean, we do a lot of venture conversations here too of startups, but it's a buck a share. It's not the typical conversation we have. So how do you get investors excited? I mean, what's the potential here?
The potential is continuing to fill these pipelines that we're actively, growing, right? And I think the important thing to remember is that we're still really at the infancy. I touched on the idea that, people are starting to see robots out in the wild, but we're still really, really early in this game. And so for us, these are really, really sticky sales, right? When we can start to build a relationship and build a partnership with our clients, they're going to become clients for a long time, right? It's not going to be a one-time sale. We're really positioning ourselves. I was listening a little bit to your early conversation, and you touched on recurring revenue, right? We are building our business to be a robot as a service business, right? Because that's going to give our customers the confidence to partner with us, that their robots will be there working for them. Well into the future, right? And that will continue to show us that smooth recurring revenue that investors will be very attractive.
We'll look forward to checking in with you in the future. Matt Casella, he's president of Rich Tech Robotics. This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. We're looking at a 7% drop in Adobe shares right now after hours. Adobe out with a revenue forecast for the current quarter that did miss Wall Street estimates, fueling investor impatience for the company's AI tools to begin generating sales. Again, Adobe right now down 7.2%. It said sales will be $5.5 billion to $5.55 billion in the period ending in November. Analysts on average estimated $5.6 billion. Key takeaway, Adobe after hours down by roughly 7%. The Dow, the S&P, and NASDAQ all advanced today. S&P finished very close to session highs at 55.95 on the S&P, up 0.8%. The Dow was up 235 points, up 0.6%, while NASDAQ gained 1% today, up 174 points. 10-year at 3.68%, with a 2-year that's yielding 3.65%. Gold up $46 the ounce to $25.58. That was a gain of 1.9%. And West Texas Intermediate crude up 2.7%, $69.15 for a barrel of WTI. Republican Donald Trump is ruling out appearing at another debate with Democrat Kamala Harris 2 days after he delivered an uneven performance at their first showdown of the election cycle. He says, quote, there will be no third debate. That word coming on his social media platform, Truth Social. Again, recapping, stocks higher. S&P up 41, up 0.8% after earnings. Adobe down now by 7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks, Charlie. Do appreciate that. Okay, Carol. Since the 2022 midterms, about 8 million members of Gen Z have joined the electorate. It's a demographic shift that's, quote, unprecedented. This is according to Henry Elkis, the founder and CEO of Helena. It's a nonprofit group. It recently helped support a study from the Stanford Deliberative Democracy Lab that our team at Bloomberg News wrote about. And by 2028, this voting cohort is going to make up nearly 25% of the electorate, meaning their voices on social and political issues could have a real impact on election outcomes.
All right, so listen up. Gen Z is right there, and soon they are going to be powerful. To help us understand this shift, let's bring in Erin Llewellyn. She is the CEO of Tilting Futures. It's a nonprofit that sends students, this is really cool, I kind of wish I was a student doing this, on a 3 to 4 month overseas trips during gap years or even during college. She joins us right now from Oakland, California. Erin, great to have you here on Bloomberg Business Week. Tell us a little bit more about Tilting Futures, how it came to be, and what's the mission in terms of working with these students and sending them overseas.
Yes, happy to. Thanks for having me. So at Tilting Futures, our North Star is really about equipping young people from all over the world with the skills they need to create meaningful social impact. And we've served thousands of young people from about 100 different countries. And the way we do this is we believe in experiential education. And we select a group of young people ages 17 to 21, bring them together either to South Africa or Malaysia. And they spend several months together, living together in a global community, learning from social impact leaders in one of our 2 current theme areas, which are not going to be surprising, climate and human rights, something Gen Z cares very deeply about. And they do an apprenticeship with local leaders working in either of these 2 themes, really learning about how does social impact happen? What are my pathways for social impact? And then we wrap that entire experience with a curriculum that helps them kind of maximize the meaning out of the experience.
Erin, do you think the sample of students who go on these incredible trips, I mean, these sound awesome.
Awesome, totally.
Do you think but do you think they're representative of the wider population? Because my first thought is, somebody who seeks this out, might have a bias toward those qualities that you bring up.
Yeah, that's a really good point. And I will say that we launched this new program with these themes and this really rooted in experiential learning from leaders doing social impact about a year ago. And the demand has been something we've never seen before. So I think that's a little nugget of information in there. So we've had 17,000 young people apply in 1 year for this program.
Whoa.
And we just launched it. The organization's been around a while, but this is new. And We've never had demand like that. And I think that speaks to
17,000?
something. 17,000.
For how many
I mean,
spaces?
we served, next year we'll serve 200 a year. We are doubling in size because we've got to figure out a way to get these kids off the wait list.
So you're harder to get into than the hardest colleges and universities.
I mean, that's not something we're trying to grow so we can meet demand. We don't want to be elite and, sort of hard to get into, because we want to tap this spirit that we see in Gen Z.
Can I ask you something? Why are you doing it?
Yeah, I think we're doing it because I think there's a gap in between skills. So there's a gap of skills as it relates to what the future of work is going to require and what is being taught right now in a classroom. And we can bridge that by bringing together communities that are very different than each other.
Yeah.
They can be in dialogue with each other that when they don't agree for long enough to understand each other. They can do creative problem solving in ways that we don't typically see right now. A lot of times we're not seeing. They think, we teach systems thinking, so they're understanding how systems work together or don't work well, to then think about how to get to the root of some of our challenges. And why not take this appetite that Gen Z has and give them the foundational skills to then go be able to realize the solutions that we need.
Before we pivot, I want to ask you though, having said what you just said, well, then maybe we need to change education, whether it's high school, whether it's college, and maybe we need to rethink about, I mean, you know what I'm saying? Like if we're creating graduates who spend all this money on an education, especially at the college level, and yet, as you say, there's things that are missing that are kind of real life experiences and kind of getting along, then maybe we've got a bigger problem.
I mean, I would say that there is a need for higher education. The academic components of higher education are necessary to create an educated society.
But I'm just saying, pulling something of what you guys are doing, and it's not just the year abroad to go to Paris and eat croissants and learn, and use your brain, which cool. But I'm just saying something that's a little bit more productive and giving you some real life skills.
I completely agree, and that is where we're headed. We are working with colleges right now to try to figure out how do we embed something like this in the higher education pathway, because study abroad it's exactly what you said. It's really a missed opportunity, and there is a way to embed experience and community with people from very different cultures that opens your perspective to what's possible, that could be embedded in a higher education pathway and should be.
Aaron, do you see this at a time like the backdrop of what's going on in the U.S. right now and sort of a shifting view on America's role in the world, this sort of move to isolationism that we're seeing from many members of Congress, this idea of the definition of America? How do you see that playing into what you're doing at the program?
Yeah, thanks for asking that, because I think about that almost every single day. And that's not just happening in the US, that's happening actually globally in many different countries. And I think it's hard to have that viewpoint when you have had a formative experience on the cusp of adulthood before you've understood your identity. But while you're still forming it, and you've had an experience in a global community that made you understand that our challenges are similar, our approach to solutions will have similarities, they will have differences. Our human needs are similar, and actually our problems are global in nature. Our biggest problems need to be solved at the scale of the globe. And so to go and focus fully inward, I don't think you can do that when you've had an experience that's exposed you to the connections of what we're all experiencing right now.
Yeah, no, it's a super, super important point, especially as we are facing elections here in the United States. And I feel like over the last couple of years, we've seen this pushback on globalization or, populism, if you will, in nations around the globe. Having said that, I think there's some times that people think a younger generation or Gen Zers, they're checked out, they don't care, they're lazy. Like there's some, but they can vote. So how should we be, I don't know, thinking about them and some of the stereotypes perhaps that are labeled on this group?
Yeah, so the nihilism checked out. I don't buy it. And the research doesn't prove this out. So McKinsey just published something that speaks to this, I think, so well. And this is in the workplace, but I think it translates into voting and into their lives, generally. But they're entering the workplace. Remember, Gen Z isn't yet 30, so they're still very junior in the workplace right now. But what they're demanding are three things. This is what this study found: purpose and accountability, opportunities for people who are from underrepresented backgrounds, and for people who come from diverse backgrounds, whatever that may be in the context. And then they want a rigorous commitment to sustainable business practices. And for me, the report said that Gen Z is doing this more than any generation before it. And that's not checked out. That's actually the opposite of checked out. And it's really holding us to a higher standard. And I think that's going to apply to this election too. They have a higher standard, and I appreciate it. And I hope I can live up to it.
Aaron, one thing that I wanted to ask about is the cost of these programs. Looking at the website, it looks like at least one of the programs is $21,000. Am I getting that right?
Yeah, that is the tuition price if you qualify to be a full pay student.
And what portion, you do have a couple different financial aid options. Tell us a little bit about that and sort of like how you're able to get students, I don't want to call them kids, but how you're able to get people who don't come from families that are incredibly wealthy and able to afford a tuition such as this.
Absolutely. I'm very proud of this, but we are philanthropically funded by people who believe in this mission, and what they believe at their core is that this type of opportunity and learning experience is transformative. And our supporters and donors know that. And what they believe is that it shouldn't be reserved for the few. So we have a mix, and we curate our classes, and they are from they really run the economic spectrum. So about 75% of our young people are on some type of financial aid. About 20% of them are on a full scholarship, and about and then there's then they really run the 21,000 all the way down to full scholarship. So that's something that we're proud of. And we have a mix. We need young people who can afford to pay for this to be going through these programs and having an experience that changes their mind and changes their perspective on the world and what they're capable of in the world. Just like we need young people from a background where this would be unattainable without assistance, having the same transformational background. And that's a big piece of our mission.
Well, you certainly gave us a lot to think about. Erin, thank you so much for stopping by. Erin Llewellyn, she's the CEO of Tilting Futures, joining us from Oakland, California. So interesting stuff.
Really cool stuff. Programs like this were not really on my radar.
Really?
Yeah, I didn't do a gap year.
But you did
definitely regret doing.
You did do a year.
I did. Yeah, I did. I did a semester abroad.
I think everybody should do gap years. I think it's a good thing. Like get out there and.
My brother did it. Very jealous.
Oh, all right. This is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got Adobe shares after hours now lower by 9.5%. Adobe out with a revenue forecast for the current quarter that missed Wall Street estimates, fueling investor impatience for the company's AI tools to begin generating sales. Again, after hours, Adobe now down by 9.3%. An update for the Dow, the S&P and NASDAQ stocks finishing close to session highs. S&P ending the session at 55.95, up today by 0.8%. The Dow was up 235 points, up 0.6%, while the NASDAQ Composite Index picked up 1%, higher by 174 points. 10-year yield 3.67%, with a 2-year that's yielding 3.64%. Spot gold up 1.9%, climbing to a record $25.59 on the precious metal, up right now by $48 the ounce. West Texas Intermediate crude oil up 2.8%, $69.18 a barrel. A rally that's already added over $1.3 trillion to the S&P 500 this week, powered ahead as the latest economic data did little to alter bets on a series of Federal Reserve rate cuts. But the question for next week is just how much of a rate cut might we see from the Federal Reserve? Aaron Kennan is the CEO at Clear Harbor Asset Management, and he was a guest right here on Bloomberg Business Week.
There's a 100 basis point cut between now and year-end priced into the Fed funds futures market, and so that would suggest that at some point, if the market's correct, we would need to see a 50. I think a 50 next week could do more harm than good.
Aaron Kennan of Clear Harbor, interviewed right here on Bloomberg Business Week. Republican Donald Trump is ruling out appearing at another debate with Democrat Kamala Harris 2 days after he delivered an uneven performance at their first showdown of the election cycle. Again, recapping, S&P up 41, up 0.7% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thanks so much for that update. Listen up. Yeah, I'm talking to you.
I'm listening.
I'm listening. Please listen. I got an important message.
I know, this is important.
For everybody out there in the Bay Area.
We care about this market.
Including Rachel Metz. I hope she's listening. Because starting October 1st, the place to listen to us in the Bay Area is on the Bloomberg Business app. It works seamlessly in your car with Apple CarPlay and Android Auto. Make the switch today because October 1st, Bloomberg Radio, streaming directly to your phone. It's the Bay Area's new home for Bloomberg Radio. The Bloomberg Business app. Download it free in the Apple App Store or on Google Play. You don't even need to be in San Francisco to do it.
That's pretty cool.
Yeah, it's really cool.
It's funny how that kind of works.
Hey, speaking of the San Francisco Bay Area.
Yes.
OpenAI is in talks to raise $6.5 billion.
Remember the headline across yesterday, and we were like, what?
Yeah, because $150 billion is the valuation. That's according to people familiar with the situation. That is a lot. That is a lot of money, and that is a high valuation.
That's a pretty high valuation. And that new valuation, by the way, is a figure that doesn't include the money being raised, is significantly higher than the $86 billion valuation from the company's tender offer, which happened earlier this year. No doubt about it, cements its place as one of the most valuable startups in the world. So it's a pretty big deal.
We got with us Rachel Metz. She's Bloomberg News AI reporter. She joins us from San Francisco. Rachel, I want to talk about the valuation in just a minute, but they really need the cash, don't they?
Yes, they do. They do need the cash. They are spending tons and tons of money on building really powerful AI models. It is expensive to do this. It is expensive to run these things. It is every time that you're building a large language model, which is what a lot of their time is spent on doing over there. At least at this point, to my knowledge, you're retraining it from scratch each time. So that's going to require a lot of computing power, especially because each time if you're trying to make or not every time, but if you're often trying to make these models bigger, and now a lot of people, including OpenAI, are also concentrating on making them smaller. So if you're making a bigger one and a smaller one, I mean, that's going to cost you a lot of money altogether.
This is what surprised me so much about your story, because this is not just a story about raising money. This is a story about how much it costs to actually invest in AI, to be a leading LLM, Rachel. I mean, this was like so shocking to me. Employees are expensive, yes, but what are the other costs associated with this development?
I mean, I think a huge amount of it is simply what they're building, which is interesting because it's not physical, right? I mean, this is software. And I guess sometimes when I think about money being spent, I think about things I can see and touch. And this is not quite that. But I mean, it just costs a lot of money to make what they're making. They've already raised a lot of money and spent a lot of money. And I think that this funding round is really interesting in part because it's making it so that fewer and fewer people can invest in this company, right? I mean, when you got to raise billions of dollars at a very high valuation, that really narrows the amount of people that can afford to do it, right? Many people might want to, but how many people actually have that kind of cash that'll say, sure, sign me up?
It's still a startup, though, right? Like, this is what's kind of wild.
I mean, yeah, it's still a startup. I mean, I guess it's kind of like, well, what is our definition of startup? And I guess by some people's definitions, you'd say no, but I mean, I guess I still think of it as a startup.
All right, so, okay, it needs all this money. I guess some part of me, like a little bit of a radar goes off, or a little, like, you know, my hairs go up on the back of my neck, because I just wonder, are investors throwing money at a sure thing, or as sure as something can be in this new AI world?
No, they're not. But I mean, you can't tell. I mean, I guess you could say, well, OpenAI seems like a good bet. It's a company that's been around for a while. There's a lot of enthusiasm for it. They actually are charging money and getting people to pay the money for their products. So from that perspective, it could sound like it is a good place to put money. But you also have to think about, as an investor, well, when do you possibly want to get any return, right? If you are looking to get money soon, it's probably not going to happen. If you are interested in sticking with it for the long haul, then, and you have deep pockets, perhaps that's the place for you.
Rachel, how would you describe Microsoft in relation to OpenAI?
Sugar daddy?
Oh, okay.
No. In all seriousness,
When you said, I thought that was the end of the sentence.
I ask you this because I believe I was reading an article, not from Bloomberg, that described Microsoft as a competitor to OpenAI.
Carol, did you say sugar daddy?
I did. I'm sorry. I know. Am I going to be canceled for that?
You're saying just because they don't, just because of a $10 billion investment, that's what that is, Carol?
Right.
I'm not even going to repeat it.
The reason we are talking about all of this, right? I know. Sorry. Okay. Go ahead.
No, it was funny. I mean, yeah, I think they're in an interesting position, right? Microsoft is both an investor in and a competitor to. I mean, they have their own products. They also use OpenAI's products, and they put money into OpenAI. So I don't know. I feel like that is a question best posed to Microsoft, because they probably would say, you know, we contain multitudes and we are all of those things.
So when does this company go public? Like, it's just such an interesting dynamic,
great question.
Right? Like, about the kind of raises that it's doing and tapping Wall Street, but it's, you know, it's got to be dangling that IPO somewhere.
I don't know. So,
or
that is something that we're looking into. I'm not supposed to say I don't know, I guess, but
no, that's okay.
You can say whatever you want.
Yeah.
Okay. I'm not sure, but it is certainly something that we're keeping an eye out for and wondering about, especially in the coming years. One thing that we do know is that along with this funding round that they're trying to lock down, they are trying to raise a bunch of debt. And this is the way that they're doing it is in a way that a bunch of other tech companies have done before going public. So it is possible that that's in the offing for them. I wouldn't be shocked by it. At this time, I don't have any like specific indicators that that's coming up on the roadmap anytime soon.
Go ahead.
Well, can I ask you something? Is it possible? I mean, Microsoft is a almost $3.2 trillion market cap company. Could Microsoft eventually buy it, or they don't need to? I'm sorry, we only got about 30 seconds. No.
Oh no, that's an interesting idea. I mean, it sort of almost seemed like that might be happening in a sense after Sam Altman was ousted and right before he was brought back in, right?
Yeah.
Like Microsoft was at least extremely supportive of sort of like the formation of a new company. I don't know. I feel like OpenAI's ascent has given it a sense of its power, at least right now, as a standalone company. And I don't know if it would want to be purchased by another company, at least not right now. I think they seem like they're doing a pretty good job on their own.
$150 billion valuation at this, according to a person familiar with the matter. Does the public market, though, Carol, have the appetite for that?
I don't know.
With a company that loses money each year.
that's a good point. So maybe it stays private longer. Rachel Metz, thank you. As always, AI reporter at Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenevec. That's Carol Messer.
So the button that says on, you actually push it before we start.
Nobody knew I made a mistake until you pointed it out just now. So thanks for that.
I'm like that annoying little sister.
Yeah, so awesome.
That is like, Mom, Dad, you know what Tim did?
I did. Okay, picture this. I'll redeem myself, okay?
Okay, redeem away.
You're sitting under a bright California sun. You're sipping a crisp, juicy, salty, tasting white wine.
Had me at California sun.
You drink this kind of wine on the island of Sardinia.
Had me at Sardinia.
But instead, you're in Napa Valley.
And
it's pretty darn good.
Okay.
Justin Ocean is the editor of Bloomberg Pursuits. He's a writer for Bloomberg Pursuits, actually. He joins us here in the Bloomberg Interactive Broker studio, and he has the lucky, enviable task.
We just gave you a promotion.
Congratulations.
I edit too.
Don't tell Chris. I did
That's
that.
true. You do it all. What?
He edited this story by Ellen McCoy about the future of wine being as white as climate. What's going on here?
Yes, so your example of the nice Napa wine you were drinking, typically we think of Napa as these like lush Cabernets, rich, bold, like tannin-rich reds.
Love Napa for their reds.
Yes.
Do you? Do you really?
Oh, yeah.
That's like what you're...
Good
okay.
red. No, they're just good reds. Anyway.
Okay.
Yeah.
All right, thank you.
No,
So
really
now you're going to love them for their whites. So white wine is kind of taking over the world. And it's like from a two-pronged thing. You have changing tastes of people wanting these like lighter, more refreshing, easier to drink, easier to pair, don't worry about it white wines.
Right.
And then you have climate change, which is changing what wines can be made and where they can be made and what types of grapes you can grow.
So we're making lemonade from lemons, basically?
Yeah, but it's going to be a delicious Sauvignon Blanc.
Okay, I like this kind of approach here, this framing.
You guys have done some great reporting on what's going on in terms of climate change, and that there's regions that either were too warm and now they're cooler, or that just it's globally happening that it's shifting around. But you're right, lemons out of lemon, or lemonades out of lemons. But it's interesting. So tell us about some of the shift that we're seeing in an area of the country that is really known for its red.
Yeah, so you have these, big producers like Larkmead or Palisade Canyon that, are doing now with white grape types called it's like either a Chenin Blanc or it's a Vermentino or a Charroux. I'm messing that up, but
you are convincing me.
You get the point. And then you have areas like Bordeaux, which are incredibly famous for their reds and collectible. That's like what people know, and they're proposing new regulations to get other grape types like Floreal and Voltis and things like that to make white wines. Part of it is, like I said, climate change. Summers are hotter. There's a bigger risk of fires. So you harvest white wines before red wines, and maybe if they're not perfectly ripe, you're still able to make a really great wine out of them, whereas reds are more finicky in that way.
What?
I'm wondering what this has to do also with changing tastes and what consumers in the U.S. are looking for.
Right. So, here's a good stat. On wine.com, which trades, hundreds of millions of dollars of wine a year, almost 7 million bottles last year, almost 10% of the wine was Sauvignon Blanc, which is, famous from New Zealand, but now it's increasingly famous all around the world. And again, it's this global thirst, this passion for wines that are lighter, more refreshing. You have, instead of eating a steak for lunch, you're going to eat a salad or more, plant forward meals. And you don't maybe want to think about what to pair with them. And also white wines are just easier to pair. Same with rosé. That is on the rise. Right now about 50% of the wine drunk all around the world is white. And that's up. It used to be flip-flopped. It used to be red.
It's funny, Justin, because we often have folks, our producer Paul Brennan is really incredible about bringing in guests from different vineyards around the world. And I'm trying to think, the individual who brought his family from London
to France
to Provence, and their wines, I think, was it a rosé?
I have to rosé. That's their most famous.
But I'm red. I'll have red with a salad. I'll have red with fish. And I know you're not supposed to do these things because I love red, but I've increasingly been trying rosés and things because sometimes I just want something lighter.
Yeah, and it's true. And you get these in this story, if you want to look it up, we have 10 bottles that our wine critic Ellen recommends, and she describes things as spicy and herbal, citrus, candied peaches or candied lemons, white peaches, jasmine, things that are just bring a bright and sunny smile to you.
Yeah.
Carol, you're referring to Stephen Kronk, the founder and CEO of Maison Mirabeau.
I have saved the bottle
regenerative
at home.
farming. Do you know this? He's a great story. He's been on our air.
It's regenerative farming.
Yeah.
And I actually have saved the bottle because I want to buy it for myself because it's incredible. But it was, I forget it. And I think he also did not a vodka, was it a gin that was also flavored?
Yeah, it was a gin. That's right. He brought us a Côte de Provence rosé from 2023.
It's so lighter and it was just nice.
A gin as well. He joined us back in April.
Oh, okay.